Real estate exam questions. 30 questions and answers. Difficulty level low. Question number 1. What is an appraisal? Answer number 1. The word appraisal has 3 meanings: a professional opinion or estimate of the value of property, the act or process of estimating value, the report that describes the process and data used to provide the value. In most states, only a state-certified or state-licensed appraiser can appraise real estate for most purposes. A broker can provide his or her opinion of value, but that is not an appraisal. A property owner may have an appraisal made of a specific property to determine a reasonable offering price in a sale, determine the value at death for estate tax purposes, allocate the purchase price to the land and improvements, determine the amount of hazard insurance to carry. An appraisal report is a written or oral explanation of the basis for the appraised value. Question number 2. What is a broker's opinion of value, BOV? Answer number 2. A broker's opinion of value, BOV, is an analysis provided by a real estate broker to assist a buyer or seller in making decisions about the listing price of real estate or a suitable bid for purchase. It is similar to a comparative market analysis, CMA. Although a fee may be charged for the analysis, a BOV may not be represented as an appraisal, which may be performed only by a state-licensed appraiser. For mortgage lending purposes, the lender requires an appraisal performed by an appraiser. For example, because the Howards had recently had their house appraised to secure a home equity loan, they were content with a broker's opinion of value when they decided to list it for sale. Question number 3. What is an appraiser? What types of license, certification, or designation may or must an appraiser have? Answer number 3. An appraiser is a person who is qualified to provide a professional opinion on the value of property. All states offer at least 2 certifications or licenses for real estate appraisers. The Certified General Appraiser is awarded to someone who is qualified to appraise any real property. The Certified Residential Appraiser is awarded to someone who is qualified to appraise residences with up to 4 units in vacant lots. State certification requires education, experience, and passing a written examination. Some states offer additional categories for licensees and trainees. Appraisers must observe provisions of the Uniform Standards of Professional Appraisal Practice, USPAP. Several appraisal organizations offer professional designations based on experience or expertise in specific areas. Question number 4. What is the goal of most appraisals? Answer number 4. The goal of most appraisals is to offer an opinion of market value. 2 popular definitions of market value are the theoretical highest price that a buyer, willing but not compelled to buy, would pay, and the lowest price that a seller, willing but not compelled to sell, would accept. The most probable price that a property should bring in a competitive and open market under all conditions requisite to a fair sale, the buyer and seller each acting prudently and knowledgeably, and assuming the price is not affected by undue stimulus. Implicit in this definition is the consummation of the sale as of a specified date, and the passing of title from seller to buyer under certain conditions. Note that these definitions, though intended for real estate, would apply to market value of anything that any appraiser, not just a real estate appraiser, might be called upon to appraise. Sales price is a historical fact, whereas appraised value is an opinion. Question number 5. What are the conditions often required for market value? Answer number 5. These conditions, all of which must be met, are commonly stated as follows. Buyer and seller are typically motivated. Both parties are well informed or well advised and are acting in what they consider their best interests. A reasonable time is allowed for exposure in the open market. Payment is made in terms of cash in US dollars or in terms of financial arrangements comparable thereto. The price represents the normal consideration for the property sold, unaffected by special or creative financing or sales concessions granted by anyone associated with the sale. Question number 6. Is real estate appraised at market value based on its current use? Answer number 6. No. Real estate is appraised at market value based on its highest and best use. Highest and best use is an appraisal term meaning the legally, financially, and physically possible use that, at the time of the appraisal, is most likely to produce the greatest net return to the land and/or buildings over a given period. It may be applied to real estate as if vacant or as improved. For example, Jones owns a residential property facing a busy street. The property has been rezoned as commercial. Although the current use of the property is for a residence, its highest and best use would be for retail, and it would be appraised accordingly. Question number 7. What are the 3 traditional appraisal approaches? Answer number 7. Sales comparison, market, cost, summation, income, capitalization. Indications of value provided by these 3 approaches are reconciled into one market value opinion by the appraiser. Question number 8. What is the sales comparison approach? Answer number 8. Formerly called the market approach, the sales comparison approach is used to estimate market value by analyzing the sale prices of similar properties, called comparables or comps, that have sold recently. For example, the subject property is a 3-bedroom, 2-bath house. 2 recently sold comparables are found. The appraiser, using the sales comparison approach, sets up the following table. The subject is appraised for $168,000. Question number 9. What are the main underlying principles of the sales comparison approach? Answer number 9. The main underlying principle of the sales comparison approach is substitution. This principle states that a buyer would pay no more for a property than an equally desirable substitute would cost. Other underlying principles include the principles of change, contribution, conformity, and competition. Question number 10. What are comparable sales, or comparables or comps? Answer number 10. Comparable sales, often referred to as comparables or comps, are properties that are similar to the property being sold or appraised. Typical similarities are location, age, size, and highest and best use. For example, a subject property is a detached 3-bedroom house that is 30 years old and will be bought with an FHA loan. Comparables would be recently sold houses with similar styling, age, location, and financing. Variations in characteristics must be taken into account when making the analysis by making adjustments up or down to compensate for the difference from the subject property. Question number 11. What is a gross rent multiplier (GRM)? Answer number 11. A gross rent multiplier, GRM, also called gross income multiplier, is the sales price divided by the contract rental rate. Although it uses rental income, it is considered part of the sales comparison approach. For example, if the sales price of a property is $200,000 and the gross monthly contract rent is $2,000, the GRM equals $200,000 divided by $2,000 equals 100. GRM may also be expressed as the number of years of rent equaling the purchase price, $200,000, divided by $24,000 annual rent equals GRM of 8.333. Whichever type of GRM is used, it must be applied consistently for properties being compared. Question number 12. What is the cost approach to appraisal? Answer number 12. The cost approach is a method of appraising property based on the depreciated reproduction or replacement cost, new of improvements, plus the market value of the site. The table below shows an example of cost approach calculations. Question number 13. What are some important considerations in the cost approach to appraisal? Answer number 13. The cost approach begins with the market value of the site as though vacant and available to be developed to its highest and best use. To that, add either replacement cost, cost to build a modern equivalent, or reproduction cost, cost to build an exact duplicate of the property appraised. Depreciation, or loss in value, is then subtracted for physical deterioration, functional obsolescence, becoming outmoded, and external obsolescence, from outside sources, to derive a property value indication. Question number 14. What is the income approach to appraisal? Answer number 14. The income approach is used for income-producing property, office buildings, shopping centers, and apartment complexes. An estimate of net operating income, rent revenue minus operating expenses, is divided by a capitalization rate to derive a value indication. The main economic principle that underlies this is the principle of anticipation of future income.